fit in all this into 20 minutes. I usually have an hour or so, so I'm gonna be flashing by pretty quickly. Normally I like to say, invite questions along the way, but let's wait till the end and see if we have time for that. It's gonna be really tight. Okay, so, and if you have any questions, here's my contact information. I go by the name Kiffmeister. I'm very easy to find on LinkedIn, X or whatever. So if you have any questions or you want the copies of the slides, I will give those away to anybody that wants them. So in terms of growth industry, it's not bad. When I started watching CBDC, that would have been around 2017 or so. There's maybe a dozen or so central banks that were exploring CBDC. Now we have 105 or so. And we're talking specifically here about retail CBDC. Wholesale CBDC is just a whole other topic. So we're talking retail here. You'll notice there's been kind of a flattening out, but that's probably natural as you're reaching the saturation point of central banks that can issue CBDC, right? There's only so many countries out there. So I think we're reaching that saturation point. All of this is based on publicly available information too. I'm kind of a stickler about that. Some central banks in privacy do tell me about their efforts, but they don't want to keep it. They want to keep it private. It doesn't go into my database. So in terms of definition, first of all, we're talking about retail CBDC or general purpose CBDC, which is in the highlighted bit at the bottom. But some of the information on this, what I call money onion, is quite relevant here. And near the top, there's a definition from the BIS where it's the CBDCs defined as the digital payment instrument denominated in the national unit of account that is a direct liability of the central bank. And we have to be real sticklers about this because there's lots of things that are proposed that kind of sound central bank digital currency-ish, which are not. And being part of the CBDCtracker.org group, everybody wants their product to be on that database. That we're kind of famous for that. So being pitched CBDC frequently that are not CBDC. And as examples, we've got Palau, an island in the Pacific. They're a U.S. dollar-based country. They don't have their own currency that's in use. So in their case, the government's planning to issue a stable coin, and sometimes that's characterized as CBDC. But Palau doesn't have a central bank, so it can't be a central bank digital currency, and it's really just a stable coin issued by the government. In Cambodia, they've got this project Bakong, which is essentially a fast payment system that's run by the central bank. The central bank's not issuing any tokens or anything like that, so that's not a CBDC either, even though the World Economic Forum at one point did call it a CBDC. Then there's this funky one that the nerds at the tracker argue about all the time. Zimbabwe, they introduced something called the ZIG. That's Zimbabwe gold, and it's a digital currency backed by physical gold, and it meets much of the criteria for a CBDC. Let's going back here. I mean, it's a digital payment instrument denominated in the national unit of account, and in the case of Zimbabwe, they intended that ZIG to be used for transactions and so on. So it was a unit of account, arguably. And it was a direct liability of the central bank. So, that's one I'm not sure about. I still have a warm feeling in my heart that this is possibly a CBDC, but the tracker colleagues don't agree with me. So it's not on that list. But you can see that it is often gray zones in this definition. So in terms of who's doing what and why and so on, this is my tabulation of motivations, and I like to divide them into emerging market versus advanced economies. Emerging markets tend to focus on things like increasing the amount of digitalization in the economy, financial inclusion. Many of them are very concerned about the physical cost of cash. I mean, there's economies of scale in producing and managing cash, and so for small emerging market countries, that can be quite a burden. And so a lot of them will cite that as a reason. Another one that's important, didn't highlight it, but preserving seniorage revenue, because as people reduce the amount of cash they use, that actually creates a loss of revenue of central banks, because on a central bank balance sheet, currency like cash appears on the liability side, and it's offset by an asset item, which is investments in typically government bonds and so on. So for many central banks, this is how they fund themselves. If they don't issue any currency, they don't have any revenue, and they can't run a central bank anymore. So preserving seniorage revenue can be particularly important for emerging market economy central banks. Another one is reducing currency substitution. And that just means, like, in many cases, we're talking about dollarization. So a country that's been hit by extreme dollarization, they want people to use their own currency so they can actually perform monetary policy, which you really can't when you don't actually control the currency that people are using. They're hoping that magically that the CBDC will mean people will start using their currency rather than the dollar. But you can. I'm skeptical. You're just changing the medium. Not the reason why people are using dollars isn't because they're digital or they got nice colored banknotes or anything. It's just there's fundamental reasons for that. So I'm kind of skeptical. Advanced economies focus on the cash usage decline too, and again, it's kind of it's not usually motivated by the same things as the currency substitution gang is worried about. But in the case of advanced economy central banks, they are concerned that their ability to do monetary policy is being undermined by the fact that nobody's using the currency of the nation anymore. And plus, it kind of relates a little bit to monetary sovereignty. And I didn't update the slide yet, but the ECB talks a lot about strategic autonomy also, and they kind of relate. And so it's the central bank may consider issuing CBDC because they want to have control over their money systems, and that includes things like, in the case of Europe, the ECB is concerned about the domination of the big American payment firms, Visa, MasterCard, PayPal, and so on, and so that's high on the Eurozone's list of motivations, and just generally improving payment system efficiency, competition, and resilience, and safety. These are all things I think every central bank should be concerned about, staying current, using the most current technology in the production and distribution of money. And there's a whole bunch of other things I don't have time to jump into. I'll touch on them a little bit when we talk about design features. But cross-border payments is one that is one that many aspire to. They want to have a retail CBDC that can be, say, interoperable with CBDC of other countries. So far, that really hasn't happened much in the retail CBDC space. I see it happening more in the wholesale CBDC space. That seems to be where the main action is. And also when I go to CBDC conferences, people are talking more about instant payment systems, which are a lot easier it seems easier to interoperate with other countries' instant payment systems to solve this cross-border payments problem. But like I say, it's at the bottom of my list. I highlight it because they all say this, but they're all put in the plans to actually do that on the back burner because it's so difficult to do. And so now I'm going to get into who's doing what. And I base my thinking on the IMF's so-called 5P approach to CBDC project management. And so they see this process in 5 phases. First of all, the central bank starts with the preparation phase. I mean, that's where the ECB is right now. And that usually means research and making sure that you've got the high-level policy designs, right? You're not, at this point, you're typically not playing with technology. You're talking about design principles, and so on. And then after that, you move on to proof of concepts, and that's where you get into the technology. In some cases, you do some sort of lab experiments with the CBDC, a hypothetical CBDC. You might be contacting different vendors and trying their software out in sort of a controlled environment. And sometimes it goes as far as actually launching a prototype, which is not the prototype stage, but a prototype CBDC that they will often try with their staff. The Central Bank of Ukraine did that some years ago, where they had a prototype CBDC that they tested with their staff for about 6 months or so. That's a proof of concept. Then you move to a prototype. In that point, you're actually decided what kind of technology is your best bet, and you build a prototype. Then you move that into a pilot phase, and that's where you're actually sending the CBDC out into the wild with real users, but you typically in a limited way, either limited in terms of demographics or sometimes usually limited in terms of time, like in the case of in China, for instance, they've got a massive pilot going on. In fact, it's pilots within a pilot. They're trying all sorts of different things in different towns and regions, testing out different types of software and so on. In fact, it's so mind-bogglingly big and complex. I have trouble actually just figuring out what's being done and where. At one point, they were apparently using or testing a distributed ledger technology-based platform, Then later on, they say, no, that didn't scale very well, so they switched to a central database. I don't know where they are today, but they're moving fast and trying lots of different technologies. And those are pilots. In some cases, the pilots came and went. Uruguay had a pilot that ran for about 6 months also. It was very successful, but they right from the start, they committed to doing just 6 months of piloting, and then they stopped to review it, and they've been reviewing it for some time since then. I'm not sure where their current plans stand, but that's a typical time-limited pilot. Then after that, there's a possibility of going to production, and that's when you launch it for real. It's no longer an experiment. Doesn't mean that you see in these little arrows that, in fact, there's some iteration. Each stage you might go back, because suppose you get to the pilot. Pilot doesn't work. You may go back and try a different prototype. You may even get to the launch point and decide, oops, something's not right. We need to go back and maybe build another prototype. I think Nigeria, which is another, that's a country that's launched a CBDC, are going through this iterative process all the time, and that's the right thing to do. If something's not working, fix it. And so then we've had that's a slide I need to jump over. So I do on my website kiffmeister.com. I publish a monthly tabulation of all the different efforts out there that and it categorizes them in a similar way to those 5 Ps I just mentioned. One I don't include is prototype, because I can't detect when a prototype is being done. It's whatever's happening between the proof of concept and the pilot. But you can see here that we've got 3 to 4 launches, and that's 3 to 4 because of that ZIG, the ZIG I mentioned before. If you don't think ZIG is Zimbabwe ZIG is a CBDC, then you're gonna be in the 3 camp. I'm still warm to 4. So there have been 12 pilots, and then there's been 21 proof of concepts and prototypes that have been run out there, and then the vast majority the 68 are doing research still, and that can be I don't have any way of really defining any finer than that. So in many cases, it's probably just desk research. Some economists at the central bank are writing some papers and doing an investigation of CBDC. In other cases, in that big 68 group, there's countries that have, or central banks that are quite advanced, but I can't measure that. Central banks are notoriously shy. I mentioned before how some of them told me, yeah, we're doing CBDC work, but do not include it on your table when we don't want anybody to know about it. So they're similarly shy about giving you updates. I mean, some central banks are really good, like Bank of Israel, Central Bank of Kazakhstan, and the ECB too are really good at sort of keeping citizens abreast of what they're doing, sending out white papers and frequent social media updates and so on. So the quality of the information can vary. And this is the view from the CBDCtracker.org, which I'm also a part of, and so that has this, it's got a map. That's the front end, so you can see who's launched, piloted, proof of concept, research, and then there's many that have canceled. And there's 2 I'll show you in a minute that launched and canceled. So in a way, the actual number of launches is not 3 to 4, it's 5 to 6, but they canceled completely. But you'll see that blue is launched, and you have to zoom this out in a really big way to see it because they're very small. But you'll see the biggest, we've got some big pilots out there like Russia and China, but there's a lot of green in there too. So these are the ones that are fully launched. You got Nigeria, Jamaica, and the Bahamas, and that's it right now. And that's interestingly that the last, I forget which one it was, but the last launch was 2023. So in that chart I showed at the beginning that showed the rapid increase and then the flattening out. If you looked at the number of central banks moving into the really serious stages like proof of concepts and pilots and so on, that seems to have stalled and maybe even gone backwards. Many central banks are pivoting towards wholesale CBDC and tokenized deposits and so on. So we're kind of on the cusp. Like if I'm doing this presentation here next year, I think I'll be showing you a different picture completely, and that that curve will flatten. Maybe even if I start including cancellations, it's going to be dipping down. And these are the ones that canceled. We got Ecuador. They were active from 2014 to 18. And Finland, they actually launched a CBDC back in 1992. But then active for about 13 years. The last few years of it, actually, they transferred it over to the private sector. So they kind of eased their way out of the business. But neither of these two efforts got much uptake. The number of people actually using it was pretty small. So you'd have to call them canceled and failures. So in terms of key design characteristics, first of all, no central bank runs the whole show from beginning to end. They issue the CBDC, but they partner with the private sector players to actually distribute the CBDC and so on. And in terms of transaction fees, so far in the pilots and launches, transaction fees aren't being charged, but I can see that might be the case eventually. Someone's got to pay for this effort, but chances are it will be merchants that will pay, but they will be charged transaction fees that are far lower than what they currently pay to the Visas and the MasterCards of the world. And then there's some talk about central banks maybe compensating intermediaries too for their role and that might be important because Nigeria is one of the countries that launched and it's not going very well. And when I talk to commercial bankers there they're the intermediaries being called on to distribute the CBDC. They're not very pleased. They were asked out of the blue to distribute and manage a CBDC program, and they're not being compensated for it at all. And in some cases, the CBDC threatens to eat their lunch, basically, because people might transfer out of commercial bank deposits into CBDC. None pay interest, and that's because of that fear of creating a CBDC that's too much like a deposit, which would lead to possibly people draining money out of their commercial bank accounts into CBDC, which could have important repercussions for the bank's ability to lend. And so there's a big concern in the CBDC community. The central banks do not create a CBDC that's so attractive that it disintermediates banks in that way, which is why they usually apply limits to the CBDC, so people can't dump all their money into CBDC. And that's a particular issue when there's a bank run. You don't want to have an easy way for people to basically drain the banking system into CBDC. And the other way that the limits come in is that you'll see what they call tiered limits for AML, CFT purposes. That in order to hold have a high hold-in limit on the CBDC, you have to have really intense KYC done and so on. And whereas they often offer a lower hold-in limit for people that want more privacy, and so the limits are very low, but they don't have to, often all they have to ante up is a telephone number and very little other identifying information. Programmability, smart contracts is discussed, but nobody's done that, and that's probably good reason. There's a big lobby group out there that thinks that this is the end of the world. Like programmability means that the central bank can control how you spend, what you spend it on, and so on. And that's left is from my old company, IMF. They were saying, yeah, this is a great thing. We can do wonderful things with programmability, but on the other side, you've got these lobby groups that think that this is going to be the worst thing. In terms of platform choices, some people might think that CBDC is based on distributed ledger technology. No, that's not true at all. You'll see here that some are and some are not, but the ones that use DLT are generally using private permissions. It's kind of almost like considered a bad practice to use an unpermissioned public network. I disagree with that, but that's the current thinking. And then some are contemplating offering an offline CBDC. G&D prototyped one of these in Ghana, and they did it in Thailand too. And I've just run out of time. I just put this up here because I want to address the underwhelming demand problem, and this is part of it. That I think some central banks think we build it, everyone's going to love it, they will come. Well, not so. It's not working out that way at all, and there's various reasons for that. And I touched on some of them earlier, like compensating merchants or lower fees from merchants compensating intermediaries. There's lots of reasons why demand has been rather underwhelming. But if anybody wants to talk more about that, I'm available after the session. We can discuss the underwhelming demand problem. Thank you.